Welcome back to Corporate Radar on CNBC-TV18. The big stock of the moment is PBFintech. The stock is up almost 10%, and it's after reporting a good set of numbers. First quarter that the company has turned profitable on the bottom line, that is the net profits, and also operational performance of PBFintech has improved. It's a high base, remember, and despite that, it's a strong growth that the company has seen. Now, it's sitting at a fresh 52-week high right now. I think it's back at the IPO price. Okay, it's not a 52-week high. It's back at the IPO price. Okay, 1,019. But I think still a little bit off the... it's gaining by the minute. When I tracked it last, it's at about 950 or so, now 1,020. All right, let's get to the management and talk about the business. The total revenues are up 43%. Contribution margins are up 400 basis points. Yashish Dahiya, who's the Chairman and Chief Executive Officer, and Alok Bansal, the co-founder and Executive Vice Chairman, join us now to talk about their Q3 performance. Gentlemen, morning to both of you, and thank you for joining us. Mr. Dahiya, I want to start with asking you about the business itself. If you can just tell us, the next quarter is expected to be the strongest quarter seasonally. So in terms of premium generation, credit disbursals, what are you expecting? Can you share some numbers with us? And, what is the overall growth looking like? What do you see as the big triggers over the next 1 to 2 years?
First of all, thank you very much for having us here. I think let's just look at it with a little bit of time in perspective. Let's look at, 3 years. We went public in 2022, and thus, if you look at the numbers of 2021, which is the back of the numbers on which we went public, 2021, our revenue was about 800 crores. In the last quarter alone, our revenue was 871 crores. And if you look at the, year, we will probably be at about 3,600 crores, right? That is 4.4 times what we were exactly 3 years ago. Now, I think that is what is critical. When you look at digital businesses and how they are growing, specifically once they gather steam, they start to grow quite rapidly. And we've been growing at scale. When we went public, we were not entirely small, right? We were quite okay. So as you look at the next 3 years, what should our growth rate be? If we've grown 4.4x in the last 3 years, maybe we'll be about 2.5x. Maybe it's 2.3x. But saying we'll be anything less than, let's say, 2x would seem kind of terrible, right? So I think 30+% growth rate should be pretty standard for us for the next 6-7 years. Now, when you look at the macro trends, India growing, young people, nuclearization of families, insurance under penetration, the health and term products that we focus on, the nominal GDP of India anyways growing at 12 to 15%, right? Again, a 30% growth does not seem like a lot.
So
a base industry which itself is growing at 10-15%, growing at double of the industry does not seem like a lot.
Got it.
And,
yeah. Mr. Dahiya, if you're talking about a 30% growth, right, I understand that you're also interested in some new areas of business, whether it's in the payment space, whether it's in the insurance space. Can you tell us what are those new areas that you're looking at over the next 1 to 2 years, which could perhaps aid this growth further?
I want to be crystal clear so there's no confusion. We're not looking at new areas. We are only looking to strengthen our current offering, deepen our current offering. Ever since we've started, we've continued to deepen our current offering, our then offering. And this is just a progress into being able to control more and more of our customer experience. And that is essential because, and I think that is why scale is important. As we get scale and we have good quality of business, we add value to our partners, and they can cooperate more with us in allowing us to provide better customer service to our customers. What does that customer service mean? It means better customer support, better claims assistance, better... and what does control mean? Control means having more and more data points, having access to more and more payment mechanisms, etc., being able to give more flexibility to our customers. All of those things we would like to build out. When we talk about our reinsurance brokerage project, what does it mean? It means being able to create better products for our consumers. And I think each one of these is just about strengthening the current business. I doubt if we would do anything outside of our existing business lines. We don't have any such plans.
Okay. All right, gentlemen, good morning. Great to have both of you here, and I hope we can make this a quarterly feature. And congratulations. I mean, I think to you and, of course, a lot of the shareholders who've seen the price, large price swings. Mr. Dahiya, if I can start with you. So 30% growth, you're saying, for the next several years on the top line is doable?
We would be very disappointed if that did not happen.
If you don't do that. Yeah. So that's you're saying, so in that sense, 30% is, you're describing it as a conservative kind of a way to look at it. Yeah.
Yeah, I would say that's par for the course. We would expect that to happen.
At the bottom line level, at a profit level, what should we expect on a CAGR basis for the next several years?
Bottom line, we haven't reached a point where you can look at CAGR and explain why. See, we have, every time we make 1 rupee of revenue, roughly 30 paise, after taking care of fixed costs, etc., flows to the bottom line. I'm talking about profit, right? So if we are growing at 30%, let's say, that automatically means roughly, 9% of our total revenue is starting the flow line. Now, that is a great way to think about how the profits would move, because the profits are moving on the base of the revenue, right? So incrementally, 6-7% every year for the next coming few years are flowing in additionally to the bottom line. And that is why the EBITDA margins will improve very rapidly. So there is no point looking at a growth rate, because this year we would probably do maybe 60-70 crores of profit. But if you look at the same business 3 years from now, we have guided that it would be about 1,000 crores of profit. So I don't think you can look at a growth rate yet. I think the important part is when the 1,000 crores is done, the profit part would still be growing at about 60% every year. So I think that is when we can start looking at PAT growth rates or PBT growth rates.
Okay. All right. Good morning, gentlemen. Nigel on this side. I recall we had a chat a couple of quarters ago and you all were very confident about turning things around. And the street has appreciated this performance. Now, this 1,000 crores of PAT, it comes in 2027, right? That's the guidance that you all have given.
Yes.
Okay. I had a two-part question on this. Your new initiative business, by when does it turn EBITDA adjusted positive? Point number one. And also, how does the ESOP cost come down? A couple of years ago, I think, or last year, it was around 600 crores, which is gradually expected to come down. So tell us about that.
So I think we don't have any immediate plans of breaking even on the new initiatives. The costs have been coming down gradually, and they will come down gradually. I think within the next 3 years, they should become break even. So by 2027, we hope that the new initiatives part is close to break even or irrelevant in the big scheme of things from either a profit or a loss standpoint. The ESOPs were awarded over a 5-year period. They were equal amount every year, but the way they get charged out is 45% of the 5-year ESOP pool gets charged in the first year, then 25%, then 15%, then 9%, and then 4%. So what that means is every year you see a lower and lower ESOP charge. So we were heavily penalized around the point of time of IPO, and we pointed this out that it is looking this way. But of course, that's the way it works.
Got it. Let's also get Alok Bansal into the conversation. He's been waiting by patiently. Alok, on PESA Bazaar, I wanted to know, the RBI came out with the recent guidelines on unsecured loans. Has it or will it have any kind of impact on PESA Bazaar's business?
It's got some minimal impact, to be honest. I think our focus in PESA Bazaar has been on unsecured lending, but not at a very, very low ticket size. Our average lending is about 3 lakh rupees per loan. So we do not see a huge amount of impact per se, but from suppliers' perspective, yes, they have become a little bit more cautious, and we are trying to work with more and more suppliers. So for the very short term, which is like this month and maybe next couple of months, there will be a small dip in the growth rate. So if we were growing at, say, X percentage, we may grow at 10% lower. But we don't really see it as a long-term weakness in the business model.
So can you tell me what that number is? What is PESA Bazaar's growth right now? Say for the full year FY24, what are you penciling in? And if you're saying that there could be an impact, how much would you want to scale down your guidance?
No, so there's no change in the guidance, and it's not about FY25. I mean, for FY24, overall, it will still grow at more than 30%. It's just that, yeah, it would have grown maybe near 40%. Now it may grow more about 32%.
Mr. Dahiya, Bima Sugam, every time we talk to you, that comes up. So that is now kind of part of the calculations in terms of how that may or may not kind of scale and what may happen there?
Our objective is not just Policy Bazaar growing. Our objective is insurance in India should grow. And I think any government effort in making that grow will be fantastic. I think increasingly what I understand is Bima Sugam is going to make life easier for everybody, including us, right? So I think it would help the entire industry grow. And whether it's ONDC, Bima Sugam, all of these are efforts that make the industry grow. And I think that would make all of us more successful at being able to give confidence to the consumer in buying more insurance.
All right. I mean, the way I see it, when it first came, it seemed, because it was a new concept, it looked like a bit of a threat. But as time has passed by, and I guess industry consultations, etc., have also happened, you're more sanguine about the role that would play. I don't know if I'm paraphrasing it correctly, but that's what it seems like. But in any case, thank you very much. Is that correct? You're smiling, Mr. Dahiya.
No, I usually smile because there's a particular characteristic of me. I don't forget everything I have said and whatever I believe. And the thing is, as times change, people start realizing what I was saying was correct. And but they themselves forget that, I was saying the same thing 1 year ago or 2 years ago. It happens all. I'll give an example, right? When Info Edge invested, Hitesh told me, you should make 100 crores of revenue. So then I went back to him and said, we've made 100 crores of revenue. You asked us to make 100 crores of revenue. He said, when did I say that? So this happens all the time. So it's okay.
So, all right. So you were not worried. You're not worried. That's, I guess, then the way to put it, as you said. Thank you very much, Mr. Dahiya, for joining us.
Thank you.
Mr. Bansal, great to have you with us here on CNBC-TV18 as well. So that's PB Fintech, the stock of the day, with the very large move, 10% plus move that we have on our hands right now.